Right, so on to the balance sheet of this published accounts question. So just like the profit and loss, the layout will be broadly quite familiar to you, the format of it. You're just, I suppose, it'll be a bit shorter. You'll be kind of leaving some stuff out or summarizing some stuff, I guess, and just putting in total figures rather than kind of subtotaling for some stuff. We do still do some kind of subtotaling, so say current assets and creditors due within 1 year, we do put a couple of items in there and we will subtotal those. So I'm putting the usual 3 columns in here for this balance sheet because I will do some kind of adding up or subtotaling. Right, as ever, we start with our fixed assets. This is also where we find our first difference to a section 1 balance sheet. We're not going to put in cost, accumulated depreciation and net book value here. I'm just going to enter the net book values, okay? The fixed assets, also other difference then for say tangible fixed assets, I'm not going to list say vehicles and buildings and office equipment, whatever you've got separately. I'm just going to put in one line item, tangible fixed assets, and put in the total. So the fixed assets then are tangible assets. I think I've just got buildings in this question. I've got patents, I'm going to have intangible assets. I've got fixed asset investments, I'm going to have financial assets as well. So my tangible assets, so it's the net book value I would put in here, so cost less accumulated depreciation. But you'll remember from when I was doing the notes, at the very end of this year, the directors revalued the only fixed asset, the building, at 1.5 million. Okay, so that was revalued at the very end of the year, so that's what goes in here. So I don't need to worry about the accumulated depreciation here. That's been moved to a revaluation reserve. So tangible assets. Intangible assets then, my patents, so they were sitting there at 336 at the start of the year, but don't forget I amortized those by another 48 grand during the year, so they're down to 288, and that's what goes into my balance sheet. Financial assets then, so yeah, this is one where it's in financial fixed assets, or sorry, fixed asset investment, 600,000. They put in a note down here saying they have a current market value of 960. That's to try and tempt us to put the 960 up here. It is the 600 that I put up here. Okay. The 960 would be if I was asked to do the financial fixed assets note, I would say they're in the balance sheet at 600, but they have a current market value of 960. But you don't put the kind of current market value in there on the balance sheet. Total of 3 of those. And you get 2388. Oh. As normal then, I'm into my current assets. So the 3 things you're going to see in current assets: stock, which I've got in this question; debtors, which I have in this question. That's one we need to watch. And bank, which I have in this question. All right, so my stock is just going in as I'm giving it in the adjustments at 1380. My debtors, so this is one you need to watch because the debtors is kind of your catch-all current assets. So it's not just going to be trade debtors. So you might be kind of opening up another working for this one. So your debtors, 278 is what's in for trade debtors in the trial balance. And then just look to see if you have anything else, or like I think just from looking at prior exam questions, like investment income due might go in there. Just you might find some other stuff that goes in there. I think the only other one in this question is, and it's one that comes up in exam questions, provision for bad debts of 46,000. Okay, so sometimes I suppose in a section 1 question we have the choice about whether or not we net those off, subtract them from each other, and just put the after bad debt provision number in the balance sheet, or sometimes we'll show it, the bad debt provision, on the balance sheet. In these ones, we should take away the bad debt provision in a working and just put the after provision number in. So it's 278, take away provision for bad debts, 46,000. And that is 232. So that's what goes in my balance sheet. All right, but there can't be other stuff in there, so just be on the lookout for that. That's just a provision. There's no, I didn't change that provision. There's no movement, so I didn't need to worry about it in the profit and loss account. But just because they don't draw your attention to it here by saying you're setting a new provision and have a movement, don't forget it. Have a look through it and do be on the lookout for it. Your bank then is on the debit side here. It's not an overdraft. It does go into current assets, but just bank is one that can go on either side. So 295 for bank. You'll add the three of those together and get 1907. My creditors, amounts falling due within 1 year. So what's going in here is your trade creditors. Your other creditors. Which I do have in this question. And you show your taxation. And it's taxation and social welfare is what they call it. By social welfare there, they just mean PRSI. So that tax can be, like your corporation tax, it can be your PAY, your PRSI, PAYE, PRSI, VAT as well that you owe. It's the corporation tax is what comes up in these questions. I think there is, there's VAT as well anyway. We'll go through it when we get to it. But and social welfare, as I said, just means PRSI payments that a company has to make on behalf of its employees. That's why that, and the social welfare is there. You don't need to know that. Trade creditors then, 482. I'm just taking that from here. There's nothing to adjust there. Your other creditors, I think I totaled, so I had a note for that, and they were 218,000. There's three of those. So it was my interest due, my director's fees, and my auditor's fees. And be on the lookout for those three. They come up a lot. Taxation and social welfare, then just be careful with this one. I've got 340 corporation tax that I was told to provide for in the notes, but you've also got VAT here on the credit side, so you owe it. So that is 164. So if you want, maybe just do a working for that. So 340 tax creditors plus 104 VAT is equal, 164, sorry, the 104 is the rental income above it. So 340 plus 164 is 504,000, and that's your tax creditors number. Add the three of those together, you get 1204. Subtract that then from your current assets and you get 703. That's my 703 would be your net current assets. And then we're adding our net current assets to our total assets. So 2, 3, 8, and 7, they add together give you 3091. And I'm calling that total assets take away, and I use the word current liabilities. So that is total assets, So it's all your assets added together, less, and I use that kind of old term here, current liabilities. All right, so that's your 3091. Then I'm going to go into what I would call my my financed by. Normally I'm not going to use that term here. I'm just going to jump a line here and do creditors amounts falling due after 1 year. So they would be just debentures in this case. So yeah, so I've got 8% debentures falling due on 2005, 2006. And they are 800. Yeah, it's 800,000 euro I owe. I put those over here. Then I've got my capital and reserves. We've seen this before. And what's going to go in capital and reserves? Well, your share capital. Your profit and loss. And we have a revaluation reserve in this question. So called up share capital. So issued capital for this company, it's the ordinary and the preference together. So the 800,000 and the 600,000, that's all share capital. So add those together and you get 1.4 million. Your profit and loss account, then that's your final answer from your profit and loss account. So the profit carried forward at the end of the year is 667. And your revaluation reserve is, I've worked it out, it's 224. That was one of my workings. All right, so you're going to add the three of those together and get 2291. And just total the two of those, and you should get the 3091. And I do. All right, so there is my balance sheet done and balanced. All right, your kind of profit and loss account, your called up share capital, your revaluation reserve, they're the ones you see all the time in capital and reserves in these questions. All right, so there's balance sheet done. So now the kind of new bit to these questions. So you'll see there the profit and loss, the workings, the balance sheet are a bit quicker than we get through a section one. So the little bit extra then we need to do is these notes. All right, and I will do those in a separate video.